something similar like Xero or FreshBooks or something like that, or you plan or have a bookkeeper. We got some coming in, a lot of spreadsheets. Notebooks, spreadsheets. All right. I like that. So I am not the bookkeeper that's going to tell you like, oh God, I can't believe you're using a spreadsheet. There is nothing wrong with a good old fashioned spreadsheet. Okay. I I don't mind a spreadsheet. That's as long as things are organized, go for it. So let's talk a little bit about what bookkeeping truly is, because I think that it gets a little bit misconstrued. A lot of times people think of it as kind of the admin work, busy work, the paperwork that kind of just goes along with being a business owner. The official definition is just the activity or occupation of keeping records of the financial affairs of a business. So that's super vague. That's not super helpful. So what I consider to be basic bookkeeping is categorizing and posting all business transactions. So that means anything that's going through a business account, whether it's PayPal or a bank account or a credit card, anything that's going through a business account needs to be categorized. So is it income? Is it an expense? Is it an asset for the business? And we're going to talk about all of those things. So if you don't get hung up on the jargon yet, because we're going to talk about it. Reconciling bank and credit card accounts, which is something that a lot of people don't do. And so we're going to talk about that as well. And then recording cash or other things. Maybe you paid something on your personal credit card. So getting those things that did not go through a business bank account to make sure that they still get counted if they are a business expense, obviously. Payroll, putting payroll in also needs to go into whether it's your spreadsheet or your accounting system. If you run payroll, we got to keep track of those gross wages, the payroll taxes that you pay, all of that kind of fun stuff. And then any other sort of adjusting entries, like if you have a loan, let's say maybe you have a vehicle loan, right? You have the loan that you're paying back, but you also have interest, which the interest is an expense that you can take off as a tax deduction. And so typically when you're doing, day to day, you're probably just putting everything towards the loan amount, dropping the loan amount down, but you need to adjust for that interest because part of what you've made that payment, some of it's principal, some of it's interest. The other thing is credit card fees. If you have something like Square or Stripe, that deposit that's coming into your bank account is minus the fees. So I like to put the fees back in so you have a total number of what your sales is and then also a number for what your credit card like merchant processing fees are. So those are kind of what I consider basic bookkeeping. The things that need to get done to keep accurate records, to make sure that you're, able to provide something to a tax preparer or to prepare your own taxes. And, obviously there are other things that I do. There are things like, your paying bills and invoicing customers that are part of that, but these are the essential things that absolutely have to get done. So, I even wrote it on here. Nothing wrong with a good old spreadsheet. So the dreaded data entry. I think this is the first thing that people think of when they think of bookkeeping. And certainly it is a large part of it, right? We have to do something with all of these numbers, all of these transactions that are coming through. And it can feel a little bit overwhelming, especially as you start to get bigger and you start to have more transactions, right? You have more money coming in, more, invoices going out, more expenses happening as you grow your business. So it can start to get a little bit overwhelming. And I think that's the part where it starts to be, there's nothing wrong with a good old spreadsheet, but the spreadsheet becomes very manual. And so as you're having more transactions, that's probably when you want to start looking at a more substantial accounting software like QuickBooks Online. I'm going to say a lot about QuickBooks Online because I'm a QuickBooks Online Pro advisor. That is the system that I work with all of my clients. I did not, I kind of, you can't do everything. So I've focused on that one system, but there are other ones out there like Xero, like Zoho Books. So there are other options there. I just don't have any experience with them. So when I say QuickBooks, I mean an accounting software in general. So that can make things a lot quicker and a lot easier on you. Once you get the hang of using it, you can set up a lot of rules. You can set up a lot of, you know, ways to make things easier for you so that you're not typing in every single transaction on a spreadsheet. It's pulling the information from your bank and your credit card, and all you have to do is categorize. So it saves a lot of time, and you can, like I said, set up rules, especially for things that are recurring, like for example, your Comcast bill or something, to say every time you see Comcast, that means telephone and internet, right? And so you don't have to continuously, type in the same thing over and over. Um, Categorizing can be subjective. So it seems a little weird to think of bookkeeping as sort of a flexible area because it doesn't seem like numbers are flexible, but the categorizing is flexible. When I'm looking at somebody's profit and loss, I am thinking about what are the things that we can simplify and what are the things that we really do need to track. And so, for example, on some of my clients, I might have one line item that says advertising and marketing. It's not a huge focus of theirs. They do some, but it's not something that they're really, focused on or need a lot of information about. So that's fine. It only has one line on the tax return. We only need one line. But if it's somebody that's growing their business and they want to keep track of, where their money is going, and then they can hopefully track on the other end of where people are finding them so they can kind of see what things are working and what aren't, then I might break that down. I might have direct mail versus online ads versus events, or, I might have a bunch of sub accounts. So that's where I say that the categorizing can be very subjective to your business and what your needs are and what you want to track, what's important to you as a business owner to know what's going on in your company. So I think don't get too hung up on the categorization or where you think things can go. If you label everything well and, if it's important to you to break those down, that's totally fine. So yeah, the key is the good labeling, making sure everything's labeled correctly and that, you're also being consistent. So if you have something set up that is, you're putting into dues and subscriptions, like you have membership dues, don't all of a sudden one month put that into like office supplies, right? Keep it the same. Whatever it is that you've chosen to be that category, just be consistent with it because that's going to really solve problems in the long run. Reconciling. Sorry, I'm going to have to keep drinking. Talking too much. This is the double check. And a lot of people skip this step, and especially if you're on just using a spreadsheet, it's a little bit more difficult, right? But really, this is important. This is the part that, you may even hear from your tax preparers already if you use one, that they want to know if things are reconciled. And so basically, that is matching whatever you've entered, whether it's on the spreadsheet or on QuickBooks, to what is actually on the bank and credit card statement. Every transaction should be accounted for, and there should be a $0 difference, right? Whatever the ending balance should match the ending balance. And truly in this day and age, especially if you're using like a QuickBooks Online when it's pulling the information directly from the bank, this should not be a time-consuming process. This should just be really just a double check, having that 1 minute to look things back over and just making sure that things are matching up and that there's nothing outstanding. So things that are outstanding could be a duplicate. Maybe you entered something twice. It could be a check if you wrote a physical check that somebody legitimately has not cashed. Maybe it got lost in the mail. Maybe that person, there's a reason that person hasn't cashed their check. So you want to not only double check, but also then research those. Don't let them sit, If it's kind of been at the end of the month and maybe they'll cash it this month, that's okay. But I don't want to see something from January that's still sitting there that has not cleared the bank. And the same could be true for deposits. Maybe you entered, hey, I received this money, but that check somehow it didn't get deposit. I've had mobile check deposits that didn't go through. So this is, obviously you don't want to wait 6 months to know, hey, I mobile, deposited a check and that never cleared, that never processed. You want that money, right? That's your money. So that's the reason why we reconcile, why we double check what's going on to make sure that we're not missing anything. And that we don't have anything that's sitting for extended periods of time that we need to deal with. It's bringing anything to our attention before it gets to the end of the year. You should be doing this every month. Once you get your bank statements, usually the, beginning of the month, like this month, we got April statements. So we're going to be reconciling April. So another question for you. Do you know how to read financial statements? And you either, nope, never seen them before. No, my eyes glaze over when I look at too many numbers. A little bit, you at least know what they are. You can read a profit and loss, but you're not quite sure what to do with that information. You can read them, but you don't normally. You just don't have time, or you just don't look at them in depth. Or yes, I love seeing them. I know I want to know how my business is doing. We got a little. Some no's. Don't worry, because we're going to talk about it. That's why I'm asking. So that's kind of one of the main things that is important to me, because you probably got into business to do whatever it is that you're in business for, right? You didn't necessarily go in to be a business owner and have to deal with all of these extra things that we have to deal with, like bookkeeping, like marketing, unless you are a marketing person, like social media, unless you're a social media person. These are just things that kind of came along with the title. And so I say all the time, I have a lot of people in the trades, right? You can be a master electrician, right? The top tier, amazing at what you do, but accounting was not part of trade school, right? It was not part of that education unless you got like maybe an MBA or something. A lot of times, whatever it is that you do is not part of the accounting was never part of that education. And so, learning to read a profit and loss, learning to understand financials was just not something that was provided. So I'm trying my best to provide it. I want people to be able to thrive. So we're going to start with the profit and loss because it's the most important. It's certainly the most relevant, I think, to business owners. And that's because this is a list of your income. So all of the money that comes in, the money that you receive for your product or your services. Then we have COGS, which is cost of goods sold. And I even go so far as to say cost of services sold, because I do like to use that even for service-based businesses that might not have a lot of, supplies. Typically, a cost of goods sold would be if you create a product, the raw material for that product, like let's say you make candles. So the glass that you put the candles in, the wax, the wick, all of those things, the packaging that you put it in to sell it, that's all cost of goods sold because you need those things in order to create the product. But I also like to think of it, if you have a service, what are the things that go into you providing that service? For some, it might be like, if we go back to the electrician, it might be supplies, right? They might have to go and they have to buy new plugs and wires and all that kind of stuff. But it's also time, right? Service-based businesses, your number one expense is staff, right? If you have staff, it's the time that you put into it. And then after that, we have the rest of the expenses. They're typically called the operating expenses, but this would be everything else that you have to pay for. It could be if you have a place of business, an office, a warehouse, a workshop. It could be something like that. It's also, travel expenses. It's also, other just general business expenses that we all have, like insurance or licensing or all of those type of things. So we're going to talk about that a little bit more in detail. So I've got a little sample here, and don't worry, this is the sample company in QuickBooks that I've messed with. I'm not sharing anybody's sensitive information. This is fake. So right now what we have, it's called Craig's Landscaping Services. So we've got a landscaper here, and we're just looking at the first part. We're looking at the income and the cost of goods sold. Those kind of go together, and they're at the top of the profit and loss. So he's got a couple different types of income. He's got his design income, he's got landscaping services, materials reimbursement. So that's when he does buy plants and stuff, and then the people pay him back. And then pest control services, or I guess he's trying to. Maybe he's only made $5. So, and then we've got on the cost of goods sold side, again, we're talking about the things that go into him providing that service. Well, obviously, he's got job materials, right? He's got plant, soil, mulch, all of the things. He's also got some subcontractors. Maybe he has somebody that's a specialist, maybe lighting, something like that, or sprinkler systems or something, that he has a subcontractor that does that work on his behalf. Equipment rental, if he needs to get a specific piece of machinery in order to, do the job. Some of these pieces of machinery are extremely expensive, and if you only use them once in a while, it's easier to just rent them. So this is really, to me, the most important part, because once you have the income minus the cost of goods sold or cost of services sold, then you have your gross profit. So your gross profit is the income minus the cost of goods sold. And to me, this is a more important number to look at than even the total income. I have had a client before that was manufacturing something. She was creating a product, and she is so excited. She's out there making sales, but her gross profit is negative. So every single item that she sells, she is taking a loss, right? She's thinking, or initially, before, she was thinking, okay, I'm creating this product, like, let's go back to the candles. She's thinking about the wax and the the wick and the actual candle, but then you have the packaging, you have the shipping, you have all of these things that go into getting it to the customer that she's not thinking of. So if we're negative on every item, right, you're making a loss. The item's $10 and it takes you $15 to ship it out. You're going to run yourself out of business. So the income number, that gross income number, this 5,000 here, that is only a piece of the puzzle. This 2,865, that's a more important number for me. And that's also where you would get your profit margin. And so that's the kind of things that we talk about when I'm advising my clients, because that's, to me, more important than just the straight income, because you can look like you're making tons and tons of income, but if you don't have any profit margin, not making any gross profit, because remember, we still have an entire section we haven't gotten to of just the operating expenses. So right now, this guy has $2,865 to spend on everything else that goes into running his business. So let's take a look at that, because obviously this is even longer than that first one, right? So he's got a little bit of advertising. He's got a giant chunk of insurance. That's sometimes, you can imagine going to people's houses and, you've got liability issues. So I'm sure that insurance is probably a hefty sum. That doesn't surprise me. You've got your professionals that help you, like the accountant, the bookkeeper, a lawyer, to help you with your business things that you're not, that's not your sort of, what's the word I'm looking for? It's not your wheelhouse. And then we have so that's why I kind of put these all in this like general business expenses, right? These are kind of things that all of us have or should have. Insurance, professional fees if we choose. For him, meals and entertainment, let's go back to what I was saying before about things can be flexible, right? It can be a bit subjective. If you are taking clients out for meals, maybe you put that up in advertising. Maybe that's part of your kind of marketing promotional strategy is you take people out. Maybe the meals are more because you travel a lot. So that could maybe go down into travel expenses. So again, these things can move around and it's just whatever makes sense for your business. But in this case, I think these are probably just some meals that he got, while he was out, probably, maybe more in the travel area. We've got some office expenses. I've got another chunk here of occupancy costs. So he is renting something. I don't know if it's an office or storage place or something, maybe where he keeps his equipment. And then we've got vehicle costs, right? Because his truck, his landscaping truck is a part. It's an asset to the business, and so he is tracking his fuel and maintenance and parts and all that kind of stuff. There are two ways to do that. You can either track your mileage or you can track the actual expenses, which is like gas and maintenance, but you can't do both. So that's a free tip. Got to pick one and you got to stick with it. So those are the types of things. And obviously we got a problem here because we're at negative 1,600. So we've got some issues that we need to look at. And so this is kind of where we start to advise. We start to look at these different things. If we go back, we can look at, we've only got the 2,800. Is there a problem here? Is that not enough? Is he not charging enough for his services to be able to cover his costs? The major costs. Generally, if you need to increase your profit, you can either raise prices or lower expenses, right? It has to be one or a combination of the two. But those are the ways to increase profit. So if these type of things, maybe those are not, the vendor costs are what they cost, right? Maybe he's already shopped and found the lowest priced vendors, so it may come back to raising his prices. It could be that he needs to focus on something, maybe this, he's spending a bunch of time with this pest control services because he was trying to launch that and it's not going very well. And so we need to decide, is that, are we gung-ho on that? Are we going to spend some money to make that work? Or are we going to refocus back into the bread and butter of this landscaping? So, and maybe we've got these occupancy costs. It's a landscaper, right? So he's going to other people's places of business, places of business or homes or whatever. Does he need an office? Maybe he could do, his stuff out of the home and just get a lower cost storage unit, keep it in the garage. I don't know. But, when we're having this big of an issue or we're negative and not making money, not having enough money to cover our bills, then maybe we need to make some of those hard choices. So when we're reviewing the financials, when you're looking at your profit and loss, the things that you're looking for are making sure that there's no negative accounts, right? We don't want anything to be in the negative because that means there's a problem. Everything should be a positive number. Income should be positive. The expenses should be positive on the list, right? Obviously, it's plus and minus in your bank account, but on the profit and loss, as you saw, there's nothing negative except for his net income. You're going to look for any inconsistency. So you can run these profit and loss, especially if you're, again, another plug for the online system, is that you can just pull these very easily. If there's a report section, you can change. Do I have the dates on here? No, but you can change this. You could have one that has each month in a separate column. So you could look at every month of the, year to date. You can look at last year. You can look at this year versus last year. There's a lot of, different filters and ways that you can set it up. If you're using a spreadsheet, you would need to set up maybe another tab on the spreadsheet where you can take the numbers, like take the totals from those individual line items and be able to have that plug into the profit and loss. You could still set it up the same way and just have that information sent over. So you kind of have to be a little more Excel savvy to be able to do that, but you absolutely can. And just have it so every time you enter stuff, you can set it up with little drop down menus so that you're like, oh, this was office supplies, and it'll plug it over into the office supplies tab. So it's doable. But honestly, my feeling on that, and this is truly as a business owner, not even as the accountant, is that how much time is that going to take you? And is that worth trying to avoid the subscription fee from QuickBooks? At some point, your time is very valuable. You're the only one that can do a lot of the things, especially if you're a sole proprietor and don't have staff that are taking care of any of the other marketing or bookkeeping or any of those things that you take care of. So you may want to rethink that. Is it worth the cost in the subscription to be able to get that time back in your schedule? So that's just my plug for that, just because I would absolutely have no time for doing a manual. I'm not saying there's anything wrong with it. It's absolutely fine. And you can absolutely get all of this information. It just takes more time to do that. So kind of as you're first starting out, this might be a good in-between, but I would say even, bookkeeper aside, that remember that your time is valuable and that there are, certain things that are much more valuable for you to be doing. It's a hard lesson that I had to learn. Bookkeeping may not have been my issue, but there were many other things, like I keep saying, sales, marketing, those were not my wheelhouse, right? I've had to learn things or delegate things. Let's see. And then the last thing is, do any of the accounts seem larger than they should be, right? Does anything stick out to you? I mean, your business. If you're looking at something and you're saying, oh my God, I did not realize that I'm spending this much on whatever, or this seems way higher than I thought it was, then research that. Were you just thinking about it wrong, or is there actually a problem? I mean, I think we've all experienced, you've gotten, they did the estimate on your utilities and your bill was like $800 and it should have been $400, whatever. These things happen. So this is your, again, way to review what's going on in your business and the health of your business. You can see, hey, I'm at a negative. I need to do something about that. Things are, there's a problem here. What can I do to change that? That's the starting. This is all the baseline for you to be able to make those decisions. Those decisions might be, can I afford to hire somebody? Can I afford to buy a new piece of equipment? Can I afford to open a new location? I mean, this is the way that you answer those questions. The next thing that we're going to talk about is the balance sheet. Now, this is the other side of the financials. Basically, they kind of go hand in hand. The balance sheet is laid out same way. Got 3 sections. You have your assets, your liabilities, and your equity. And we're going to talk about that. A lot of people don't necessarily look at this, or they don't understand it. It is definitely the more difficult to understand than the profit and loss. That seems pretty straightforward. But it is very important because typically what they call double entry accounting, right? I'm sure you've heard that term, is, when you put in a transaction, let's say you bought a candle making thing. I keep going back to that. I don't know. You bought in a piece of equipment, right? So you have the expense for the purchase of that piece of equipment. And then you also have the cash being removed from your bank account. And you can see the bank accounts are the start of your assets up here on your balance sheet. So your assets are anything that the business owns. That could be cash. It could be large pieces of equipment or vehicles or a building or anything that typically, depending on the size of your business, but certainly for a small business, anything over $2,500 is considered an asset. So, which is kind of a big, sometimes, these computers and stuff. I mean, if you work off of a laptop, your laptop might not even be an asset. They're only like in the thousands, some of these, unless you have some sort of big fancy one. That might not even be an asset, but certainly vehicles, buildings, again, if there was some sort of, large piece of equipment, like, maybe the tractor for this landscaper guy, or his, maybe he's got a big fancy like tiller or something like that. Those things might be over that limit. The other things that are assets are your accounts receivable. Accounts receivable is basically If you are a business where you send out an invoice, so specifically probably a lot of service businesses, right? You send out an invoice saying, hey, pay me this much money. It goes into accounts receivable saying, hey, people owe me $5,281. That's how much I've billed out to people, and they haven't paid it yet. So it's still an asset because people owe you. And then once they pay you, then it goes in as income, right? Then it's received. If you're on a cash basis, I'm not going to go into cash versus accrual today. That's another story. But typically, most small businesses are on a cash basis. Taxes are on a cash basis. So that's kind of what we're going through. We're not going to get there on accrual. But this is a little bit on the accrual side, just because you're saying, hey, I've done this thing, I've invoiced this out, and then later I expect to receive this money. Inventory, obviously, if you are having products or you keep things on hand, your inventory is an asset. You own those things. Undeposited funds is kind of similar. That's when you say, hey, okay, I've received money, but I haven't quite deposited it in the bank yet, right? You're holding a stack of checks because you're going to go to the bank later. So technically that's an asset. If it's in QuickBooks, there's probably some sort of a problem, right? We don't want stuff sitting there. Either it's definitely is just sitting on your desk and you haven't taken it to the bank, or stuff is sitting in QuickBooks and you haven't marked it as being sent to the bank. So, and then obviously he's got his truck, right? He purchased a truck. So that original cost of the truck is an asset. And then if we keep moving down here, I had to break it up so you guys could see everything. We got liabilities. So this is everything that the business owns. So I mean, owes, not owns. Owns is asset, owes to other people is liabilities. So the flip side is your accounts payable. So that's bills that you've put in the system saying, hey, I need to pay this, but you haven't paid it yet. And then once you pay it, it becomes an expense. That's kind of part of that. So not everybody uses these. If you pay your bills when you get them, then you're not going to use accounts payable, right? It's only if you're, kind of gathering them and you pay a little bit at a time. Same with accounts receivable. If you are selling product and it's like, cash basis, right? You're running a register and people get the item immediately, then you're not going to have receivables, right? It's a receipt. You just did it. Other liabilities are sales taxes, right? A lot of people think that's an expense. It's not an expense because you are not charging people that, the state's charging it. So you charge them on the transaction, but then that's money that you then owe to the state. You have to take that money and give that to them. It's basically a pass through. So as you're holding it, because usually you have to pay those like monthly or quarterly, depending, as you hold it, it kind of sits in that liability account. And then when you pay it out, drops it back down. So it kind of just washes out, should. And that's probably what this like board of equalization, that's probably some other kind, some of these states have crazy different use taxes or whatever. You've also got a loan payable. That's probably for the truck, would be my guess, the loan for the truck. And then a note payable. So that's a larger amount. So that's probably some sort of a loan that he got for, opening the business or buying a new piece of machinery, whatever. The difference between a loan and a note is typically that a note is a longer term thing, like more like a mortgage is kind of like a note, it's just a longer term. And you can see they've separated it out into current liabilities versus long term. So maybe that was, again, for a larger piece of equipment or something. The truck is probably going to be paid off in typically like 5 years or something. And a note would be more like, 10, 15, 20, something much, much longer lived. And then the credit cards, obviously, as you rack up a balance on those. The other thing I want to say about the balance sheet is that this is a snapshot in time. So whenever I ran this balance sheet, let's say it's as of today, that is what the balances were as of the time that I ran it. So things can change, right? Obviously, things are happening, and by the end of the day, these balances might not be the same, but this at least gives you an idea of what they were at that snapshot in time. So the last section on the balance sheet is equity. So the equity is what you personally have invested or taken out of the business. This is what your skin in the game. So obviously you have draws. Your draws are you can call them draws, you can call them distributions. That's money you've taken out of the business. And by the way, if you do happen to run any personal items, like maybe you accidentally, and I'm going to say accidentally because you shouldn't be running your personal and your business all together. It's a no. We can talk about that later if you want to know more. But it happens to the best of us. It's happened to me. I had a whole credit card. They both were silver, and I thought I was running it on my business card, and I wasn't. So it happens to the best of us. So that type of thing is also a draw. If you bought a personal item through the business account on accident, you would just count that as a draw. It's the same as if you would have drawn money out and put it into your bank account. The other flip side of that would be investment. Maybe, you can see he's had to put money in the business, probably because it's not doing well. And so he's had to cover the bills by putting money in. It could also just be your, initial investment. And typically I do like to separate it in here. And I do that because, as I was saying, it's a snapshot in time, but the balance sheet is also cumulative. So when we talk about things like the next one down here is retained earnings, we're talking about things that have happened over the life of the business. So the equity is over the total life. So everything that you've ever taken out or putting in. The retained earnings is any money that you've either made or lost in prior years. That's what's right there. So what happens is you have your net income. This net income here, that's the bottom line on the bottom of the profit and loss, which I must have run these at two different times. I apologize because you can see this is not negative. I messed that up. I'll have to run them. If you don't run them at the same time periods, again, the balance sheet is a snapshot, so it may not have been the same time. And so the net income is the current, what is happening right now, what your net income is right now. And the retained earnings is basically at the end of the year, whatever that number is. If it's negative 1,600, then the retained earnings becomes negative 16, minus another 1,600. And so basically at the end of the year, that profit loss clears out. You start fresh with a new one at the new year, and that retained earnings is everything that you've earned in prior years. So what I was saying is I like to set it up in this fashion, because what I will do is I will put in just this current year's draws and investments so I can see, how much, because I get that question all the time, like how much have I taken out or how much have I put it in this year? And then at the end of the year, I move whatever this balance is up to the main parent account of the owner equity. And that's just so I can answer those questions easily, and so that the clients can see easily this is how much you've done in 1 year. All right. And I see that question from you, Daphne. I'm going to answer that in 1 second. So when we're reviewing this, right, we're looking at it. And I do usually review that. If you do it on a monthly basis, I feel like that is, even just to give it a glance over, right? I feel like that's the best outcome, right? You want to see on a month-to-month basis how things are going. You could do it quarterly. I would not advise just doing it yearly, right? So much changes in your business during the year. I mean, you guys know that. Like anybody that's ever been in business or even been in other business, things change throughout the year. Maybe you have busy seasons, slow seasons. There's just things going on. So if you're waiting till the end of the year to look at your financials, that is so far in the past, it might as well have been last year. I think at least quarterly, if not monthly, to pull one of these. I look at it monthly. I mean, obviously I'm biased, but I do truly look at it and decide, hey, What am I doing with this profit? If I made profit, if I haven't made profit, there's a problem. If I have made profit, what am I going to do with that? Am I going to reinvest it in the business? Am I going to take some for myself? Like, you know what I mean? These are things that I'm on a monthly basis deciding and figuring out what the next month's going to look like and what can I do? Can I do that website update? No, I didn't make that much profit. Let's save that for later. Whatever, right? These are I don't want to say day to day, but month to month. I mean, I certainly do look at it more than just once a month, but that's probably just me. So the other things that you're going to look at on your balance sheet is, have you recorded that interest? Again, that could wait until the end of the year, but if it's something where you're really trying to bring down balances and make sure that you're keeping track of the actual, legitimate line of the balance, you could do that monthly. Did you purchase any new fixed assets, right? Making sure that those went to the right place. Did you sell any fixed assets? Because again, if you sell the truck or you trade the truck in, then we need to take it off of the books and put the new one on, or take it off. I mean, depends on what you were doing. And then again, are there any large or negative balances where they shouldn't be? As you can see, there are a couple things that are negative, like obviously draws, you're taking money out, that's a negative. But none of these other things are negative. So you just want to make sure that there's nothing that's, abnormal or too large. Again, going back to, if you decide, hey, I really don't think I still owe $25,000 on this note, right? Maybe you've been putting it to the wrong category. Maybe you've been putting it somewhere it shouldn't be. Maybe you've been putting it down on the loan instead of the note, maybe that's why that number's way smaller. So it's just a double check. So let's put it all together. Let's talk about getting everything ready for taxes. Like, what is kind of the final result after, obviously I'm preaching you should be looking at these as often as at least, monthly, if not quarterly, so that you can make those really good business decisions. So that you have some data, some background to go off of when you're trying to decide things. But when we're kind of putting it all together and packaging it for the tax preparer, or when you're doing your taxes, the things that you need are the financial statements, profit and loss and balance sheet. They're going to want to see those. You want to keep your receipts, but do not give a giant package full of receipts, of the shoebox or a recycle, bag. Don't give those to the CPA. They will not be happy and they will probably charge you more. If you're doing at least a spreadsheet and keeping track of things, and you can, even if you don't have the profit and loss set up in Excel, if it's all labeled and, they could do that, you're going to have a much nicer bill. So with receipts, you want to keep receipts. Obviously, I'm kind of preaching that. I will say that you can keep them digitally. So another plug for an accounting system is that it has a mobile app that you can snap a picture of the receipt and it will attach it to the expense. And then you have it there forever. And it's easy to find. It's not in a shoebox. It's, hey, let me type in Comcast and look at the last bill. So it's just a lot easier to deal with. So you can keep those digitally. You do not have to keep the paper copy. And in many cases, you go to Staples or something like that, and those kind of plasticky ones, they fade, they're gone. So it's really in your best interest. I will give you another tip that if you were audited, if there's a question, they're going to want to know the business purpose of those expenses. So if it's a thing, especially things like meals or travel, things like that, they want to know where you went, who you talked to, what did you talk about. So typically I write those things. I met with so-and-so. We talked about, referring clients to each other. I write that at the top of the receipt and then snap the picture. So that way I have that proof of, and I can back it up with my calendar, right? But they want to know, you can't just make this stuff up after the fact. They want it to be, if you're keeping up with these things and you're, have everything laid out really nicely, then they're probably going to be like, okay, you're good. let's see. If you have payroll, you're going to want to send your like quarterly, like 941 and that sort of thing, the reports that you get quarterly to the tax preparer. And then if you have any 1099s, and again, I can talk about that more if you guys want to know, if you have questions about it, then they don't either you're asking the tax preparer to prepare those for you, or if you've done it on your own, like through QuickBooks or something, they just want to know, how many and that you did it. You don't necessarily, some of them may want a copy, but you don't necessarily need to give them a copy. So basically, summary, bookkeeping is an essential function of the business. I know it's typically viewed as like a necessary evil. It's busy, it's admin work. It's not what you got into business for. But I'm hoping that you kind of got the gist from my, presentation, that what those, doing, taking that step of, getting those numbers and getting a good baseline and having that data can give you so much information. If you are that person that is sitting there saying, I have no idea what's going on in my business, you're feeling out of control, this is a great way to start to gain some control back, to understand what is going on, because these numbers are going to be able to tell you, what's going well, what's not going well, having it laid out. Because I think, especially pre-COVID, there was a lot of, oh, there's money in the bank. It's fine. Things are running. I'm doing okay. And, kind of post-COVID, where certainly during COVID, my business exploded because people were like, oh, that is not good enough anymore. It might have been before, it's not now. And it's really kind of still carried on, that it's just not good enough. Getting everything together at the end of the year, and like I said, just having a profit and loss that you review at the end of the year, that's not good enough. That's only telling you what happened already. If you're not dealing with it on at least that monthly or quarterly basis, you're not able to make those changes, almost in real time, or at least in a much sooner fashion. You don't want to be doing not well, you're negative $1,600, and then you don't find that out until 6 months later. That doesn't help you. So numbers don't have to be scary. They really don't. They are telling the story. They're telling a story about what's going on in your business, the health of your business, how things are going. Again, I am not a tax professional. I have a CPA that does my taxes. They are very much, I have to be up on things like, what is the tax deduction, what's deductible, what's not deductible, certain things like that. But I certainly don't know everything. I don't know every single little rule. So if you don't already have a tax professional, I highly recommend it. That also is a deduction. So if you pay a tax preparer to pay your taxes, to prepare your taxes, you can take that off on your return. So yes, you have to pay the money, but you do get to at least deduct it. So they should be your best friend. And again, keeping up with things throughout the year. If you're not doing that, do it, because you don't want to scramble at the last minute, right, to get everything ready, and there's this giant, like, oh my God, it's January or February or whatever, and you're like, I haven't done anything. That's not a good mental state to be in. It's going to be way more overwhelming than keeping up with it. But also, like I said, just being able to make those decisions much quicker, know what's going on before it becomes a major problem. So I think that's kind of the end of this. I have my information. I do typically post content on my social media channels, because again, this is important to me to get this information out, to try and provide this. Really, to me, is just basic like financial literacy. It's just your business financial literacy, right? Unless you went and did accounting or bookkeeping or did some sort of schooling, it was not part of your training. And so I want everybody to at least be able to do these things. Whether you hire me to do it or you do it yourself, it has to get done, and it's going to be better off for it, because I really feel, that we all thrive together, right? It takes a village. None of us are running our business truly on our own. We have support. As you grow, you're going to be hiring, people, whether they're employees or they're going to be, contractors that help you with something. We need to have this community of helping each other out. So I'm going to start answering some questions in the chat, but then I've got a couple here, and then I'll just kind of open it up to the floor. Yes, I do people's books either monthly, or I do have some people, I do advisory. So again, what we were kind of talking about, but obviously more in detail. I do those sort of things with small businesses. And I do QuickBooks Online training as well. So I do train people on how to use QuickBooks Online, how to navigate and sort of get set up so that they can do them on their own. And I am going to be we're doing another webinar next month, and I'm sure they'll share that details with everybody, where I'm going to be doing a quick navigation through QuickBooks. So obviously my training's more intensive, but we're going to at least give you a good starting place. And then somebody was asking me, during an audit, what benefits does QuickBooks provide that Excel might not be able to provide? And does the IRS recognize Excel as a bookkeeping system? That is a great question. I don't know the exact answer. I feel like a CPA or maybe a tax attorney would know a better. But from what I understand, because I do get in my industry newsletter, is I get to hear the outcomes of a lot of these IRS cases, the audit cases, or the cases that have been brought to court, and what the outcomes were and why they made that ruling. And a lot of it is that people are not keeping the appropriate documentation. And they're not keeping the documentation, what they call contemporaneous, like so at the time that it happened. So again, you can't go back and try and recreate a year's worth of receipts and mileage, and you need to be doing it at the time. So my thought is that while an Excel spreadsheet on its own is not going to be enough proof, it's certainly going to help your case, because you're going to be able to find things more easily. You're going to be more organized, but they're going to want to see the documentation, the original. Because again, let's say, for example, you are keeping track of those things in Excel or in QuickBooks for that matter, and you've got a charge from Amazon. Just having that charge from Amazon and showing, hey, this is on my bank account, that doesn't mean it's a business expense, right? You can buy anything on Amazon. So that doesn't tell them anything. They want to see, what did you buy and why was that a business expense? So the documentation is more important than the accounting system. To me, the accounting system is the tool in which to keep you organized and to help you with that process. So oh, somebody was asking me about the separation of business and personal. Okay. So the separation of business and personal is one of the most important things that you can do. If you have not started your business yet, or you are just starting out, you absolutely need to have a separate business account, separate credit card, whatever. Keep those things separate. And the reason for that is not even necessarily bookkeeping, though obviously that's annoying to do bookkeeping for, because you've got everything mixed together and you're going to have to figure out where to categorize it. But what it does is it invalidates your LLC, or it basically is saying, it's more on the legal side. So if for some reason you were sued, if there was a problem, whatever, they are going to say, well, you've mixed your business and your personal all together. There's no separation, so there's no limited liability, right? You haven't separated. They're all together. The other things that can happen is they can categorize your business, especially if you haven't made money, if you're not doing great, or you're kind of just starting out. They can categorize it as a hobby and just say, oh, like you have a side hustle. They'll say that's just a hobby. That's not a real business. If you're not treating it like a real business that has its own bank account and its own functions, they will say that's just a hobby, and they will disallow all of your tax deductions and just say, no, you can't, we're not treating this as a business. So that's and again, also in the audit, where if you have everything mixed together, they're going to be even more scrupulous about like, are you sure this is a business expense? Are you sure this is? Because it's a constant, well, everything, you're paying for your groceries through the same thing. So everything is going to be in question. So that's the reason why it is so important to keep those two things separate. It's definitely more in the legal liability, and also to, have some protection in case of being sued, being audited, being anything. So if you are still doing that, you can just open a business account, right? Make sure, you do need to have an EIN. You do need to have be registered with the state, do the, Maryland Business Express, to make sure you have what is it called? A trade ID or something. It's on there. It's on the website. And then you can open a business account. I mean, I also say you want an EIN if you don't have one, just because if people ask you, again, we're going to go back to 1099s. If you are providing services for somebody and they're going to ask you for a W-9 to get that information, they're going to send you a 1099. What are you going to do? Give out your social security number? I 100% have people that I have their social security number on the 1099, like for my clients' vendors. And I'm like, really? You're giving your social security out to just anybody that you work with? That doesn't seem like a good plan. Just get an EIN. It's free. So yeah, open a bank account, start moving, make sure you move any kind of direct deposit, direct auto pay. It's annoying, but it's going to be more annoying the longer that you hold out and don't do that. And certainly that annoyance is worth not having to have something much more drastic happen down the line. If I don't want to use QuickBooks Online, what other good software would you recommend? That is hard for me because, again, QuickBooks Online is my main thing. I don't use any other softwares. I do know about them. So I know that a lot of people are using Xero. It's Xero, Xero, or Zoho Books. I've heard some good things about. I'm at the point now where I've developed my company. I have hired people. I am not training all of my staff on a new system. QuickBooks Online has gotten a lot of flack. It was terrible in the beginning. It still has a lot of quirks. Things go wrong, but they do generally fix them fairly quickly. It's online, right? It's so if something updates and it breaks something else, you see that immediately. Like, it's not like we've shut the thing down for maintenance. It just happens. And so something might break, and then you try it again later that afternoon and it's fixed. So, for me, I am on the side of, the benefits really outweigh any kind of negatives, right? Because again, time is number one. It's so much easier when you just get the information pulled from your bank and credit card, and all you have to do is mark it where it needs, what category. And like I said, you can set up a rule. So every time it sees Comcast, it goes to telephone and internet. You can make this whole process a lot less time consuming. And all of those other ones do that. I will warn you against some of the ones like FreshBooks or HoneyBook. They are not truly an accounting system. In fact, they usually talk to QuickBooks. So people might start out there and might do their invoicing or, manage other things in their business through that, and then have it send the accounting information over, because it doesn't typically you can't reconcile. I know I tried to use FreshBooks once for somebody when I was early career. There's not even a reconciliation feature. Like, you can't reconcile. So I was like, this is not even truly an accounting system. When you're first starting out, it might be enough to at least, help you get organized without, being super manual like an Excel spreadsheet, but it's not the full picture. And I will also say that the great thing about QuickBooks, and I think Xero too, Zoho is kind of newer. So I don't think a lot of things talk to it. QuickBooks is very jack of all trades, master of none. So it is not the best at everything. It tries to do a lot of things, right? It does payroll, it does project, like you can do job costing, you can do all kinds of things. It just may not do those particularly the best, right? And so there's lots of other softwares out there. There's CRMs, like your client management systems. I have a separate system that I run my tasks and my the business of who needs what where. And those things usually talk to QuickBooks. So, you can still get that information back and forth, and maybe something else does a particular thing better. So, Xero also has a lot of compatibility. I don't think Zoho's there yet. So it would also be if you have something that you're thinking about, like an industry specific software that maybe you use, you may want to look at what the connections are. Let's see. If I run out of money, should I take out a personal loan? I have an SBA loan and I underestimated my working capital needs. That's a personal decision, and that may be something that is you could potentially talk about with your financial advisor about what's best for your situation, but certainly you can loan money to the business. So instead of putting it in as an investment, you could put it in as a loan and pay yourself back slowly. And I have done that in, earlier days. I've certainly, especially as I was trying to grow my business, right? I put a little bit of money to kind of front that so I could get a new website, so I could get my brochure done, right? Like you got some things. And so maybe I do front that and pay myself back a little bit at a time. And that's you can absolutely do that. And if you already have a loan but maybe actually the banker, whoever you went through with the SBA loan might be the best person to ask, because that will also color whether you can even get either an additional on the SBA loan or a different kind of loan. So they're probably the ones that are going to be able to tell you what is even allowable, right? What they're going to be able to do for you. Let's see. With separating business and personal business, if I'm at a farmer's market and I buy myself some dinner, should I use the business card and not my personal card? Or if I buy gas from my vehicle that I use for personal as well as traveling to markets, or is that last one where the itemizing versus mileage comes into play? It is. Yeah, it is where the mileage versus gas. So basically, there are two options when you go, and I'll get back to the first part in a minute. There are two options. If you are using your business or your vehicle for business, right? Whether you are going out to see clients, or like you said, if you're going to farmers markets, or you have to go pick up product and bring it back, whatever. There are two ways to do this. You can either do mileage reimbursement, which if you Google 2024 mileage reimbursement, it is like, I don't know, 67 cents or something. I don't remember off the top of my head. I'll Google it, if I need to know. And that's what you can take off as a deduction. It's set by the IRS. And it's actually a fairly decent amount. I have clients that use mileage over actual because they get more money out of the mileage reimbursement from the IRS, So it's a choice, and you can kind of decide what works best from you. Typically what I see is if the business owns the vehicle and it is 100% business vehicle, again, if we go back to the Craig's landscaping truck, right? It's a landscaping truck. It probably says Craig's landscaping on the side. You have a delivery truck, right? Those type of things that are 100% business use, or at least, 80, 90%, right? It's mostly business. Maybe you run to the grocery store on your way home. Doesn't matter. Those things are typically what we use for actual, right? You have that's an asset on the business. And then you also have, your gas, your maintenance, your parts, all of those type, the registration from the MBA, all of those things you can take off. If it is not used 100% for business, or if it's not owned by the business, right? It's like your personal vehicle, but you're running to clients like I do, right? Mine's just a personal vehicle that I use it In fact, my tax preparer has said, hey, next time when you're ready to buy a car, you should do it on the business, because this is, 95% business is what I use my car for. So if it is, the business has bought it, but it's only like 50% business, or, it's not majority, or the vehicle is not owned by the business, then you need to do mileage. And again, we're going to go back into the documentation, because they are super picky about it. And so they want to know the starting mileage, the ending mileage, where you went, who you talk, again, business purpose. And again, I'm going to die on the QuickBooks train. They have that mileage tracker as part of their mobile app. There's also apps like TripLog or Mile IQ that you can get, again, to make this whole thing easy. It tracks all of my mileage. I use TripLog. I didn't 100% like the QuickBooks one, but again, if you don't want to have another subscription, go for it. It works fine. And I can just swipe left or right? Business versus personal, right? Whatever the trips are, it just tracks them. It tracks every time I get in my vehicle, it tracks it. And then I usually do it at the end of the month. You could do it as you go, or weekly, or whatever makes sense. I do it as part of my month-end process of making sure, and I go through my calendar. Okay, this was a business. And then I write notes in it too. I went to, again, you've got I went to Dublin to meet with somebody about sending referrals to each other. So I've got I've got that written on the top of the meal receipt, and then I've also got it in the app, the mileage app, of why I went to Dublin Roasters, which is a lot. It's like my second office. So they'd be used to it. So yeah, so those are the two ways to do things. And once you pick one, you have to stick with it. It is that you've decided, I guess, if you purchased a new vehicle, if I purchase a vehicle and decide to put it on the business, I could change it then, but you can't just change it mid-year willy-nilly. So then the other part, meals, again, if it's a business purpose. So and technically, again, we all kind of, I'm not snitching out to the IRS, so you do you. Same with my clients. I will advise on what is the legal appropriate, and then whatever happens, that's, their prerogative. But typically for meals, a travel meal, just because you're out, again, if we talk about the landscaper, I'm sure he's out, he probably runs through McDonald's. That technically is not a business expense. Even though he was out on the job, he could have packed lunch, So a travel meal would be you've gone out of state. You couldn't physically make yourself food. You couldn't go home and eat it. You couldn't have packed it because you are out of state, at a conference, or, an out of state client. Typically that's what would be considered a travel meal. For clients, taking out your clients, again, just make sure you're writing and keeping track of why you had that business meeting, right? You're not just goofing off having drinks because you guys are friends now. You have to talk business, even if it's for a little bit. And those type of things, all of those things are 50%. So you only get 50% of that as a tax deduction, not the whole amount. So if you spent $10 at the coffee shop, you only get to deduct $5. Now you put the whole thing in when you're doing your bookkeeping. I don't separate that out, but at the end of the year, when the tax preparer does his, puts all the things in, he's only going to put half in. The only time that you can get 100% meals is if you have something like a staff party, you have employees and you have a pizza party, as long as it's not every week, every Friday or something. It has to be, just to promote goodwill and not be super often, right? You can't just do it buy them lunch every day. That's not going to work. But if you have a company picnic, or a pizza party because everybody had a really hard week, it's April 15th and we're all crazed, right? That kind of thing. Those types of things are 100% deductible. So yeah, so if you're just out and you're going to the farmer's market, that would be tricky. I would say if you were talking to that other market person about business, you could probably get away with it. Like you could probably consider that a business meeting because you were talking business when you bought from them. But if it's just because you were there and you bought something, it really wouldn't count. Oh, okay. And I am over time. And as you can tell, I can talk about these things forever. Um, so we're going to have to wrap it up, but obviously you have my information, my socials and stuff. If you are interested in anything, feel free to reach out to me, but I'm also happy to, kind of point you in the right direction. I do point many, many new business owners to the Maryland Women's Business Center. So if this is how you found out about it, you're in the right place. I send people there all the time, especially new or, aspiring business owners. So take advantage of those. Those services are free. Those are, I became involved with them because I reached out to them when I was, just ready to hire employees and kind of starting my journey. So, yeah.
Thank you, Katie. Thank you so much for that wonderful presentation. I am loving to see how engaged everyone was in the chat. That's great. And we will share the slides with everyone who registered. And if they have any more questions, will they be able to contact you? Is that
Yeah.
okay? Awesome. So if you have any more questions, please definitely feel free to reach out directly to Katie. Obviously, she is very knowledgeable in what she does, and we're very happy to work with her. And thank you so much for your time today, and we hope you have a great week. Thank you so much.
Yeah. And keep an eye out because like I said, I'm doing the QuickBooks online training, kind of a 101, I think, in a couple weeks. So look out for that because I will be back.
Yes, awesome.